The artificial intelligence market is set to explode to over $1.3 trillion by 2030. Are you ready to profit from it? In this video, I'll break down 3 AI stocks that analysts believe could skyrocket, companies already making major moves in their fields. We'll cover an enterprise AI software leader, a digital infrastructure pioneer, and a cloud computing giant empowering millions to build AI-powered apps. This isn't just another stock video, it's your blueprint for capitalizing on the biggest tech shift since the internet. So grab a coffee, get ready to take notes, and make sure you watch till the end. Hit like, share your thoughts in the comments, and subscribe for more investing updates. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. First up is 𝗗𝗓 ticker symbol AI, a leader in enterprise AI software and one of the most recognized names in the artificial intelligence space today. If you're looking for a company that's at the forefront of the AI revolution, 𝗗𝗓 is a name you need to know. 𝗗𝗓 builds mission-critical AI applications for massive industries like manufacturing, finance, and energy. These are sectors where efficiency, accuracy, and real-time insights can make or break a business, and 𝗗𝗓 technology is designed to deliver exactly that. Their C3 AI platform lets clients design and deploy complex AI solutions at scale. Think predictive maintenance for oil rigs, real-time fraud detection for banks, or optimizing supply chains for global manufacturers. The platform is highly flexible, allowing companies to tailor AI models to their unique needs, which is a huge advantage in today's rapidly changing business environment. Their standout product, the C3 Generative AI Suite, integrates large language models directly into company operations, letting employees interact with data using natural language. This means that even non-technical staff can ask complex questions and get actionable insights instantly, breaking down barriers between data and decision-making. This is a game-changer for efficiency and decision-making. By making AI accessible to everyone in an organization, 𝗗𝗓 is helping companies unlock new levels of productivity and innovation. Imagine being able to ask your company's data anything, and getting a clear, concise answer in seconds. 𝗗𝗓's recent expanded partnership with Palantir to serve the US government is a huge vote of confidence. Government contracts are notoriously difficult to win, and this partnership not only validates 𝗗𝗓's technology, but also opens the door to even more high-profile clients in the public sector. Now let's talk numbers. The stock has seen big swings, from the low $20s to nearly $50 in the past year. This kind of volatility is typical for high-growth tech stocks, especially those in emerging fields like AI, but it also means there's potential for significant returns if you time your entry right. After a pullback, analysts see a moderate buy with some price targets as high as $40, suggesting significant upside. The consensus is that 𝗗𝗓 is well-positioned for future growth, especially as more companies look to integrate AI into their core operations. The demand for enterprise AI is accelerating, and 𝗗𝗓 is well-positioned. As digital transformation sweeps across industries, companies are racing to adopt AI solutions that can give them a competitive edge, and 𝗗𝗓 is right at the center of this trend. They're not just a concept, they have real products, real customers, and a clear growth strategy. Their solutions are already being used by some of the world's largest organizations, which speaks volumes about the reliability and scalability of their technology. Their Q4 revenue hit $86.6 million, up 20% year over year, with subscription revenue up 41%. This kind of growth is impressive, especially in a market that's still in its early stages. It shows that 𝗗𝗓's business model is working, and that customers are seeing real value from their products. Customers are signing long-term contracts, showing real commitment. These multi-year deals provide revenue stability and demonstrate that clients are betting on 𝗗𝗓 for the long haul. 𝗗𝗓 is moving toward profitability, with a strong gross profit and $750 million in cash, giving them a long runway for innovation. This financial strength means they can continue to invest in research and development, expand their product offerings, and weather any short-term market turbulence. CEO Thomas Siebel, a Silicon Valley veteran, leads a team with a proven track record. Siebel's experience and vision have been instrumental in guiding 𝗗𝗓 through the ups and downs of the tech industry, and his leadership is a major asset for the company. In Q4, they closed 47 pilot agreements, a 52% increase from the previous quarter, often leading to larger deployments. These pilots are a key part of 𝗗𝗓's growth strategy, as they allow clients to test the technology before committing to full-scale rollouts. Their client list includes the U.S. Air Force, Shell, and Baker Hughes, diversifying their revenue streams. Serving such a wide range of industries helps insulate 𝗗𝗓 from downturns in any one sector and highlights the versatility of their platform. The enterprise AI software market is projected to be worth hundreds of billions, and 𝗗𝗓 is one of the few pure plays. As more companies realize the value of AI, the addressable market for 𝗗𝗓 will only continue to grow. Risks? The stock is volatile and tech can swing, but the long-term trend is in their favor. Investors should be prepared for ups and downs, but the company's fundamentals and market opportunity make it a compelling option for those with a long-term outlook. 𝗗𝗓 keeps innovating, rolling out new features to stay ahead. Their commitment to continuous improvement ensures they remain competitive as the AI landscape evolves. After the pullback, the stock trades at a more attractive multiple, potentially a great entry point for long-term investors. If you believe in the future of AI, this could be a rare opportunity to get in before the next wave of growth. To sum up, 𝗗𝗓 is a leader in a massive market with strong growth, a fortress balance sheet, visionary leadership, and a growing customer pipeline. Their technology is already making a difference for major organizations, and their momentum shows no signs of slowing down. It's a stock you need on your watch list. Whether you're a tech enthusiast, a growth investor, or just curious about the future of AI, 𝗗𝗓 deserves your attention. If you want to learn how to spot undervalued stocks like this, check out my Value Stocks Investing Master Course, link in the description. I'll walk you through my process for finding high-potential companies before they hit the mainstream. Let's move on to the next AI opportunity. Next up is Applied Digital, ticker symbol APLD, a company that stands out as a unique and, in our view, undervalued play on the rapidly accelerating AI revolution. While many investors are focused on the software side of AI, Applied Digital is quietly building the essential backbone that makes all of this innovation possible. Unlike the tech giants racing to develop new AI algorithms and applications, Applied Digital is focused on the physical infrastructure, the next-generation data centers that are absolutely critical for powering artificial intelligence at scale. These aren't your average server farms, they're purpose-built to handle the massive computational demands of today's most advanced AI models. Think of Applied Digital as the picks and shovels of the modern AI gold rush. Just as miners in the 1800s needed reliable tools to strike it rich, every AI company today needs access to immense computing power, and that power lives in the specialized data centers Applied Digital is building and operating. Their focus is on high-performance computing, or HPC, which goes far beyond standard web hosting. These facilities are designed for the most demanding workloads, from training large language models to supporting real-time AI applications and even blockchain operations. Recently, Applied Digital secured a massive 400-megawatt lease with a major U.S. hyperscaler in North Dakota. To put that in perspective, that's enough power to support the needs of some of the world's largest tech companies. This single deal is expected to generate a staggering $2.2 billion in revenue over the life of the lease, providing a rock-solid foundation for future growth. This long-term contract isn't just a headline number, it provides stable, predictable earnings for years to come. For investors, that means less uncertainty and a business model that's far less risky than many other high-growth tech plays. Beyond North Dakota, Applied Digital is also building a 100-megawatt facility in Texas. This expansion highlights their expertise in managing energy-intensive computing environments, serving both the booming AI sector and the still significant crypto mining market. Their ability to deliver on these complex projects sets them apart from competitors. Despite these impressive achievements, the stock has been volatile. The market seems to be overlooking the value of their contracted revenue and the long-term stability it brings. This disconnect could present a compelling opportunity for forward-thinking investors. Analysts are taking notice, however. APLD is currently rated a strong buy by several major firms, with consensus price targets around $14.50, significantly higher than where the stock trades today. This bullish outlook is driven by the company's robust pipeline and the surging demand for AI infrastructure. Demand for AI-ready data centers is exploding, and Applied Digital is one of the few pure-play companies actively building and operating this critical infrastructure. As more businesses and tech giants race to adopt AI, the need for high-performance computing capacity will only intensify. Their strategy is smart and simple: build in locations with access to cheap, reliable power. By situating their data centers in places like Ellendale, North Dakota, and Garden City, Texas, they gain a significant cost advantage, which translates directly into higher margins and a more competitive offering. The management team at Applied Digital brings deep experience in both technology and large-scale infrastructure. They know how to raise capital efficiently and deploy it quickly, enabling rapid expansion without sacrificing quality or reliability. The world's appetite for data and computing power is growing at an exponential rate. Applied Digital is positioning itself as a key supplier to the tech giants driving this growth, ensuring they remain at the forefront of the digital transformation. Their business model is built around long-term leases, which create recurring revenue streams and provide a high degree of business stability. This approach makes their financials more predictable and attractive to investors seeking steady growth. Applied Digital is vertically integrated, handling everything from site selection and design to construction and ongoing operations. This end-to-end control ensures high-quality operational efficiency and the ability to quickly adapt to changing client needs. Unlike the big real estate investment trusts, Applied Digital is laser-focused on the high-performance computing and AI niche. This specialization makes them more agile and better positioned to capitalize on emerging trends in the industry. The 400-megawatt deal is just the beginning. As their clients' needs grow, Applied Digital is well-positioned to expand further, adding new facilities and increasing capacity to meet surging demand. Of course, there are risks to consider, such as potential construction delays or customer concentration. However, the company's long-term leases and diversified client base help mitigate these concerns, providing a strong safety net for investors. Financially, Applied Digital is on an upward trajectory. With new contracts coming online, the company is approaching a major inflection point in both revenue and profitability. This momentum could drive significant shareholder value in the years ahead. In summary, Applied Digital represents a compelling picks and shovels play on the AI revolution. With massive contracted revenue, a strong pipeline, and enthusiastic analyst support, the company is uniquely positioned to benefit from the explosive growth in AI infrastructure. If you're looking for exposure to the backbone of the AI revolution, not just the software but the essential infrastructure, APLD deserves a spot on your research list. It's a company that's building the future, one data center at a time. Now let's move on to our final AI stock pick. Finally, let's dive into DigitalOcean, ticker DOCN, a cloud computing powerhouse that's become the go-to platform for developers, startups, and small businesses around the world. While it may not have the same name recognition as AWS or Azure, DigitalOcean has carved out a unique and important space in the cloud ecosystem. Unlike the tech giants that focus on massive enterprise clients, DigitalOcean is all about making cloud computing simple, affordable, and accessible for the next generation of tech innovators. Their platform is designed to remove complexity, so even small teams and solo developers can launch, scale, and manage applications with ease. This relentless focus on simplicity and the developer community has helped DigitalOcean build a fiercely loyal following. Their intuitive interface, transparent pricing, and active support forums have created a strong business moat that's hard for competitors to replicate. Developers who start their journey on DigitalOcean often stick with the platform as their projects and businesses grow. This stickiness translates into long-term customer relationships and recurring revenue, which is a huge advantage in the competitive cloud market. A major turning point for DigitalOcean was their strategic acquisition of Paperspace, a leading AI and machine learning platform. This move instantly expanded their capabilities and positioned them at the forefront of the AI revolution. Thanks to this acquisition, DigitalOcean's community now has direct access to powerful GPUs and advanced AI tools, resources that were once out of reach for smaller players. This is truly democratizing access to cutting-edge AI infrastructure, leveling the playing field for startups and independent developers. With a full suite of AI and machine learning solutions, DigitalOcean empowers startups and small businesses to compete with much larger companies. They can now build, train, and deploy AI models without the massive budgets or technical teams that the big players have. The stock has pulled back from its previous highs, but Wall Street analysts remain optimistic. Many see a moderate buy rating and healthy upside potential, with price targets like $38 from Morgan Stanley, reflecting confidence in the company's growth prospects. What really sets DigitalOcean apart is its financial discipline. The company is already profitable and generating free cash flow, something that's still rare among high-growth tech companies, especially in the cloud sector. In their latest earnings report, DigitalOcean posted $189 million in revenue, up 12% year-over-year. Even more impressive, their average revenue per customer continues to rise, showing that their customers are growing and investing more in the platform. DigitalOcean isn't standing still. They're rapidly expanding their product portfolio, adding features like managed Kubernetes, serverless computing, and other developer-friendly tools that make it easier to build and scale modern applications. The Paperspace acquisition is already paying off, driving strong demand for DigitalOcean's GPU offerings. The ongoing AI boom is fueling this growth, as more businesses look for affordable, scalable AI infrastructure. Their target market, developers and small businesses, is enormous and still growing. This segment is often overlooked by the big cloud providers, but it represents a massive opportunity for DigitalOcean to capture long-term growth. At the helm is CEO 𝗣𝗟𝗏 Srinivasan, who brings a disciplined approach to growth and a clear vision for long-term value creation. His leadership is helping DigitalOcean navigate a rapidly changing tech landscape. DigitalOcean's brand and community-driven marketing engine is another key advantage. By fostering a vibrant developer community and leveraging word of mouth, they keep customer acquisition costs low and build lasting relationships. Despite all these strengths, the stock currently trades at a discount to its peers. This is surprising, given its profitability, strong growth, and the major AI catalyst from the Paperspace acquisition. Of course, there are risks, competition from cloud giants and broader economic headwinds. But DigitalOcean's niche focus, sticky customer base, and commitment to innovation provide resilience and a clear path forward. In summary, DigitalOcean stands out as a profitable, cash flow positive company with a strong brand, loyal customers, and a massive opportunity in the rapidly expanding AI market. They're truly the cloud for the little guy, empowering millions of developers and entrepreneurs to innovate, build, and grow their dreams. At today's prices, DOCN represents a high-quality business trading at a reasonable valuation, with significant upside potential as the AI wave continues to build. So, as you consider your next move, keep an eye on DigitalOcean, a company that's quietly powering the future of cloud and AI for the innovators of tomorrow. There you have it, 3 distinct AI stocks, each with a unique angle and massive potential. 𝗗𝗟𝗏 leads in enterprise software, Applied Digital builds the infrastructure, and DigitalOcean empowers the next wave of innovators. The AI boom is happening now. Focus on companies with real fundamentals and clear growth paths. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Which AI stock do you think has the most explosive potential? Let me know in the comments, and don't forget to like and subscribe for more investing insights. Thanks for watching. See you in the next one.